Hey folks, and welcome back to another video. I hope you're all doing well. In today's video, I decided to cover the ICT break of structure, market structure shift, and the liquidity sweep, and how you determine whether the break of structure is going to send you lower, or if it was a liquidity sweep that is going to now send you higher, right? How do you know that after a break of structure, will it send us higher? Will we get a market structure shift in the opposite direction after this break of structure, right? It's kind of difficult sometimes to figure out whether the break of structure was a liquidity sweep or if it was an actual break of structure that is now going to continue to send us lower or higher, right? So that is what I'm going to cover in this video. And I want to establish real quick that this video is meant for people that are already familiar with the terms break of structure, market structure shift, and all of this, right? So I'm not going to be teaching what a break of structure is or what a market structure shift is in this video. If you're confused on that, I have a bunch of other videos explaining all these concepts, right? So yeah, and as you can see, I decided to pull out the face cam for this one. This is not the best of cameras out there because I never really used one, so I didn't feel the need to buy one. But I will get a better one for future videos. So yeah, this is where I stay. As you can see, I'm a plant type of guy, but yeah, let's get into the video. Okay, here we are on the E-mini S&P 500. So as we can see, we had been in a bearish trending market for a while now, right? But then down here, price decided to start making higher lows and higher highs, right? So how do I know that this break of structure, right, is a valid break of structure to send us higher? Or if this is a fake out to send us lower, right? How do I know that this is a break of structure and not a liquidity sweep? Because by looking at it, it could easily look like that we're now switching from a bearish sentiment to a bullish one, right? But there are certain things that will tell me whether this is a valid break of structure or not, right? So now I'm going to tell you. So first of all, we not only swept the previous high, right? We also swept on the 5-minute these two relative equal highs over here, right? And notice how that we failed to displace above this level here, right? Had we closed up here, I was very confident that we were now going to go here, right? But because we failed to displace over these highs, as you can see, we came up and then came back down, right? We did not close, did not displace over these highs. So that is the first thing that is telling me that this is going to send us lower, right? And the other thing is, if we go to the 15-minute, what do we see? We see a bearish order block, right? So we hit a bearish order block respecting a bearish PD array, right? A higher time frame bearish PD array. So when we start respecting bearish PD arrays, that tells me that the order flow is still bearish, right? In order for me to change from a bearish mindset into a bullish one, I need to see a lot of bearish PD arrays get violated, right? So in this case, we sweep these two relative equal highs and we then respect a bearish order block, right? But this is not the most important part. The most important part when determining this is your drawn liquidity, right? And if we go on the daily time frame here, my drawn liquidity right here is obviously going to be this low right here, right? We have two relative equal lows sitting right here on the daily time frame, right? And right here, we managed to close below this bullish fair value gap, right? Indicating that we're now going to continue going lower, right? Remember what I just told you about respecting bullish and bearish PD arrays? So if we are now violating bullish PD arrays on the higher time frame, this is a clear indication for me that the draw is lower, right? I have a whole video on this. But once I see a closure below this fair value gap, that automatically, right, when this candle right here closed below the daily fair value gap, I am 100% certain that we're now going to at least take out this low, right? And then what happened after? We came up here respecting a bearish fair value gap, right? So now my draw is automatically going to be this low. in this low, right? These two equal lows. Why? Because we were violating bullish PD arrays and respecting bearish ones, right? So in order for you to tell whether the breakup structure was valid, right? If it was going to send us higher or if it was going to continue going lower, you need to establish your drawn liquidity. And you do that by watching what PD arrays we are respecting and which ones we are violating, right? So in a bearish market, you want to see bearish PD arrays get respected and bullish PD arrays get violated, right? And that's what we saw, right? So that was the first example. Now we're going to be looking at a trade that I took today, actually. So let's look at that. Okay, here we are on the E-mini NASDAQ 100, right? This was the long that I took earlier this morning, right? And kind of unfortunate that I did not hold, right? But 8:30 was news. It's FOMC today, so I try to avoid trading on this in general, but I saw this opportunity and then I decided to jump in, right? But how did I know that this breakup structure, right, was not a breakup structure, but it was a liquidity sweep, right? How did I know that this was not a breakup structure to now send us lower, or a market structure shift to now send us lower? But I knew that this was a liquidity sweep that was going to send us higher, right? In order for us to understand this, we have to look at the bigger picture, right? So as we can see, if we go to the 15-minute, not only did we take out the previous low, right? We also took out this low that was inside a bullish PD array, a bullish higher time frame PD array, right? So what did I see? I saw a fair value gap, right? And two lows getting swept, okay? And you can combine this with the premium discount tool, right? So this fair value gap was in equilibrium, okay? These are all factors that you must take into consideration when talking about a downtrending or uptrending market, right? Because equilibrium is known to be an area where price is likely to reverse off of or consolidate, right? So I had a higher time frame confirmation, right? In order for me to continue to believe that we were going to take out these lows or this low down here, what did I need to see? I needed to see a candle closure below this fair value gap. Then I could start trusting breakup structures, right? At least until we hit this fair value gap, right? Because, again, if we violated this, we now start violating bullish higher time frame PD arrays, just like here, right? Right here, we violated a higher time frame bullish fair value gap, which then continued to send us lower, right? Here we're respecting one, which is now sending us higher, right? So that is the first thing. The other thing is my draw on liquidity these days are going to be bullish, okay? I'm not going to go into that right now, but again, I have my draw on liquidity established, which was bullish, right? I had a higher time frame PD array delivery, right? We were respecting a higher time frame bullish PD array. And then what did we do? We started violating bearish ones, right? So again, we fail to displace under this low over here, right? We start making this indecisive candle, right? So as soon as I see that liquidity sweep combined with a higher time frame PD array in equilibrium, right? I bought the market as soon as we violated the first PD array, okay? So this fair value gap got violated, so I instantly bought right here, right? Then we violated another one, which made me add to my position and buy more, right? And what more did we have? If we take a look right here, we have all of this trend line liquidity, right? Low resistance liquidity that was resting above here, all these highs, right? Price had engineered all this liquidity up here. So I figured that we must take out all of this at some point, right? So I had a clear drawn liquidity. I had bullish PD arrays getting respected and bearish ones getting violated, right? And that is why I started to now think, okay, this is probably a turtle soup, right? A liquidity sweep, and not a break of structure, okay? Again, in order for me to trust these break of structures, I would need us to close below this big fair value gap, okay? Because then that now indicates to me, okay, now we're starting to break bullish fair value gaps, right? We're starting to violate bullish PD arrays. So that would indicate that, okay, the next draw is probably down here, right? And then let's say we then, after we swept this low, violated this. Okay, now the next draw is probably down here, right? So it's all about having a drawn liquidity for the day, right? And watching what PD arrays are getting respected, okay? So after this right here, right? After this got inversed, after this got violated, right? I knew that this break of structure was valid because we had just violated not only one, but two bullish PD arrays, right? And then we start to respect bearish ones, right? We have a bearish order block here that was clearly getting respected, right? So now I can trust these bearish PD arrays until we hit this fair value gap. Then I need to see a closure below this in order for me to trust bearish break of structures again, right? Until we hit the next one. Then I need to see that get violated in order for me to start trusting bearish break of structures, right? Down to this low. But then I saw we respected this bullish PD array. We started violating bearish ones. So I figured, okay, the next draw is probably this high to take out all this low resistance liquidity that was engineered right here, right? And all of this was combined by my daily drawn liquidity, okay? And that is basically how you determine whether you should trust these break of structures or not. This takes screen time, of course, takes practice. And this can, of course, fail, right? If we look right here, we violated this 15-minute bullish PD array and then instantly went higher again, right? So it can fail, but it is way higher probability to trust break of structures or market structure shifts when combined with all of this, okay? You must include the higher time frame in your analysis. It's very important, okay? You can't just be trusting every break of structure you see or every liquidity sweep you see or every market structure shift you see, right? You need to have the bigger picture into consideration, right? So I hope this video helped you out, and I hope you learned a thing or two. Keep in mind, I'm not used to doing this while being recorded, on camera, so bear with me. But I hope that it helped, gave you a bit of insight on when to trust certain things and when not to, right? And I have a whole video where I cover how I determine my drawn liquidity. So if you want to watch that, go ahead. So yeah, if you have any suggestions for me and what I should do next, don't be afraid to let me know in the comments. And don't worry, I will invest in a better camera. This is just temporary. So yeah, until I see you next time, stay blessed and bye-bye.